what do you think LLM's role in finance is, maybe from both a fundamental and a quant perspective?
Yeah, I mean, I think there's definitely a lot of use cases. We've covered some of them already, but on the systematic side, certainly sentiment analysis is one that comes to mind, and there's been a lot of work on using LLMs for that. On the fundamental side, we've had some discussions in earlier panels today on how they can be used in the case that you described. So these LLMs are able to do some basic financial reasoning. They have a number of strengths in terms of their ability to extract information, to to pull out what's relevant. And in fact, there was some research done, I believe, at the University of Chicago earlier this year that tried to see how would an LLM perform, if it was asked to do a financial analysis task. And it seemed that it actually does better directionally in terms of figuring out what earnings are going to be in the future than the average financial analyst. So, this is still early research in terms of the work that was done, but it does seem like these models have promise. Of course, one of the downsides or difficulties is that it can sometimes be hard to understand how it's coming up with those recommendations. So that is something that, work needs to be done on that.
Yeah. Yeah, one of the dangers, so we've done some analysis on sort of investor days and LLMs to see if it's prudent to include sentiment on an investor day into an LLM and making a call on sentiment post an investor day. So some of the challenges is that there's a bit of a model bias in an LLM because it's trained on, it's trained using sort of current models and used on historical data. And some of the other challenges is that the data it pulls could be somewhat have a look-ahead bias because you could even guardrail the dates, but we don't necessarily know if the LLM is going out in the future and doing the analysis. So there's some inherent risks, I think, with these LLMs. Maybe, Samira, you can sort of talk about how you can sort of deal with these model or look-ahead bias risks, maybe with LLMs or even broader strategies.
So for us as well, we have a couple of applications that we have applied LLM, and we have faced some of these biases. And maybe I can share some of the, like sentiment analysis is one of the things you want to look at the market short term, understand what are the pitfalls, what are the market dislocations you want to capitalize on. And we have built an LLM system that works very effectively in capturing. We receive a lot of these sell-side research analysts, and 20, 30 of them, each 50, 100 pages, different indicators, and you have this future positioning data that they have their own problems. So what we've done, we've applied LLM to basically provide us the sentiments, the final scoring of these sell-side. With look-ahead biases, I guess, it happens in traditional machine learning style as well. With LLMs, it's like the back testing of data is not really practical. It's not feasible when there is a data involved. So for us, before allocating any risk to a model, LLM-based model, we try to incubate the model for a longer period of time, make sure that it really performs out of sample, then allocate risk to that. That's one way of dealing with it. There is another example maybe I can share related to a project. We wanted to extract the tone of central bank, and we were facing some of difficulties with ChatGPT. It was mixing tone with sentiments, and we had to fine-tune the internal LLMs on some of the domain expert data that were labeled by our own capital markets. So in that case, to fine-tune again, you can face this problem that the models are basically train based on data sets that you don't have transparency. What are those data sets? And those data sets can come with different variation and correlation structure that are not serving your purpose, the application that you're using. So in that case, you have to basically bring in, fine-tune them with your own sort of either human-based data or other methods, so that can help.
Very interesting. Go ahead. Arik, go ahead.
I'd like to play a little bit of a devil's advocate here. So I think if you look at, kind of historically, the finance industry and there's those type of topics, I want to call them trends, but that people get excited about, right? And there's every so often there is another emergence of another thing. And we need to be cautioned. There is a lot of, I think, benefit and promise, but like anything, there's also some downside or some issues that people need to be aware of. Right? So the first, I think, when you think about LLM is that they do have deficiencies, right? I'm not an expert on LLM by any stretch, but just from reading, sometimes they make mistakes. Sometimes they were found to have various type of biases. I think the problem is that when you, as an investor, you're being presented some research or a new idea or strategy, one of the first question that investors ask is kind of what should I be aware of? What's the risk here? When it may not work, right? When you have a signal or a strategy or any one of the things we spoke a little bit about before, it's often you can at least point to when something may not be working as well, right? In what state of the world, what may be an issue. What to do about it may be more difficult, but at least you know. With this tool, it's very difficult, right? It's a complete black box. So it may work well or not work. There could be, again, various problems, deficiencies. You just haven't found them yet. So that's one. Number two, it may be very good at aggregating data, but inferring on a kind of a one-off is something else. And what I mean by that is the following. If you think about getting a kind of a quick read into the mood in in newspapers about a certain topic, you want to aggregate a lot of articles about something that obviously would be a great candidate for this, efficiency and scale and so on. If you want to understand on average what was the verbiage by company executive after earning calls, you just want to aggregate over many companies, that's great. Now let's go to a one-off case. So there is a company, you have the maybe the Q&A session and the executive up there and they're answering questions, and you want to use this to try to glean the sentiment and see if there's anything there that didn't get reflected in the earning reports. So not only, of course, it's more difficult because it's a one-off as opposed to averaging, but I can tell you that we had requests from companies to educate their executive on how to talk in those instances in order to essentially be interpreted the way they want to be interpreted, right? So like anything, it's a tool, and this tool, when it's applied, again, on average, or when it's applied to text that is not being manipulated,
it's being gamed,
right? But you can game it. So that's a risk you need to be aware of. So in a one-off, it can be gamed. Certainly, if you so there's those issues as well. We talked about crowding before. If kind of the whole industry starts converging into using this, then you'd expect a lot of similar outcomes among investors, right? So again, you'll have we may call it crowding or not, but you're going to be using the same inputs and likely making the same decision, and we're going to see even more gyration in the market as a result of that. So yeah, you'll be processing more information more quickly, but you'll be making ultimately the same decision, and the market will be even less efficient, to Cliff's point. So I think those are all things that we need to keep in mind. Again, there is a big difference between operational efficiency and the ability to be more productive, and the substitution of, I think, the kind of the decision making with this tool.
Maybe just to comment on that. I mean, I totally agree with that. I do think, though, that there's sort of a crossover between the two, right? In being more productive, being able to use more data sources, more alternative data sources, more textual data, being able to read the news as it comes in, like on a Bloomberg screen when it scrolls down the screen, you can't even read it, right? And you certainly can't absorb the content of the articles, whereas now potentially you can. We actually have customers that are working on solutions whereby throughout the day you can look at topics that are being populated, and the topic may grow, it may shrink, and it's essentially cluster analysis of the embeddings of the vectors in all these news articles, right, that are coming through so fast you can't read them. But now you can read them by way of reading the summaries of each cluster and then drill down the articles if you want. And you could potentially automate that fully, right? You could have news and clusters of information with associated companies, and you could have sentiment of one cluster or one topic that's positive, sentiment of another one that's negative, and the companies associated therewith. And now you could automate the trading of positive and sentiment baskets of stocks associated with those topics. So, those things are going to be, they're not going to be done by humans, right? It's just there's too much information. It would take too long. There's only one way to do it. So but I think we're sort of saying the same thing in the sense, I think there's efficiency at some point can lead to sort of new investment strategies and being able to take advantage of data better than, without those efficiencies. And so it becomes sort of a net additive strategy, if you will.
You're saying that efficiencies can lead to innovation. We're out of time, Shafiq. Any last words do you wanted to add?
No, I mean, I just wanted to, your question about event bias, I mean, the gold standard would be to have the large language models created in a way where you have a rolling window. So you have training and then test moving forward. Of course, that's not really computationally feasible. And I mean, you could ask, if you're using a prompt, you could tell a large language model not to use data that's in the future, but it often doesn't listen to that. So it is a challenging problem, and I think until we're able to produce these models on that rolling basis, it'll be hard to really deal with that event bias completely.